Have you ever wondered how people used to make payments in the past, long before the invention of money? In the beginning, there was barter. This simple system allowed communities to trade goods directly with one another. A farmer might exchange a bushel of wheat for a potter's clay bowl, for instance. But as societies grew more complex, the limits of barter became apparent. Enter coins. With the advent of standard weights and measures, coins revolutionized commerce. They were portable, durable, and universally recognized, making trade more efficient and far-reaching. Yet, even coins had their limitations. They were heavy and cumbersome in large quantities. So, an innovative solution arose in the East during the Tang dynasty in China: paper money. Light, easy to carry, and backed by the state's promise, paper money became an essential component of economic activity. From barter to coins and paper money, the early forms of payment set the stage for more complex systems. As society evolved, so did our methods of payment. But how did we move from coins and paper money to bank transactions? Well, it all started with the creation of banks. These institutions were formed with the idea of safely storing and lending money. This concept revolutionized commerce, enabling a more secure and efficient way to handle large sums of money. Then, in the 17th century, another significant leap in the evolution of payment methods occurred: the introduction of checks. Checks provided a safer alternative to carrying large amounts of cash, further enhancing the security and convenience of transactions. Fast forward to the 1950s, and we see the birth of another groundbreaking invention: credit cards. These little pieces of plastic allowed people to make purchases and pay for them later, adding a whole new level of flexibility to consumer spending. With the advent of banks, checks, and credit cards, money became more than just physical objects. It became an idea, a promise. The digital age brought about a revolution in the world of payments. But what were the key milestones? Well, let's take a step back to the 1980s. This was the era that saw the establishment of the first online banking services, a time when the internet was still in its infancy. These pioneers dared to venture into uncharted territories, laying the groundwork for the digital payment systems we know today. Then came the late 1990s, a period marked by the emergence of digital wallets like PayPal. These platforms changed the game, making online shopping a breeze. No longer did you need to input your card details every time you wanted to make a purchase. With a digital wallet, all it took was a few clicks, and voila, your transaction was complete. As we moved into the new millennium, peer-to-peer payment platforms like Venmo started to make waves. These apps enabled people to send money to each other instantly. Whether you were splitting a dinner bill with friends or paying your share of the rent, these platforms made it easy to transfer money on the go. And then there's the rise of cryptocurrencies like Bitcoin. Providing a decentralized alternative to traditional banking, these digital currencies have opened up a world of possibilities, offering a secure and anonymous way to conduct transactions. From online banking to digital wallets and cryptocurrencies, the digital revolution has made payments faster and more convenient than ever before. The way we pay for things has changed dramatically over the centuries. But what does the future hold? As we gaze into the crystal ball of the financial world, several trends begin to emerge. Arguably, the most significant is the increasing use of biometrics as a security measure. This isn't just science fiction anymore. We're already seeing fingerprints and facial recognition used to unlock our phones and authorize payments. But this is just the tip of the iceberg. In the future, we may see even more unique identifiers, like retinal scans or even heartbeat patterns, used to secure our financial transactions. Then there's the potential for more widespread adoption of cryptocurrencies. While Bitcoin and its ilk have been around for a while, they've yet to fully penetrate the mainstream. But as blockchain technology becomes more understood and trusted, we could see a future where digital currencies are as commonplace as the credit and debit cards we use today. And finally, let's consider the possibility of a cashless society. While this may seem far-fetched to some, the reality is that we're already moving in that direction. With the convenience of digital wallets and peer-to-peer payment platforms, physical cash is becoming less and less necessary. But whatever the future holds, one thing is clear: security and privacy will be paramount. As our financial lives become increasingly digital, protecting our personal information will become even more critical. As we move towards an increasingly digital and potentially cashless future, The evolution of payment systems is a story that is still being written. From bartering goods to tapping a card, the evolution of payment systems has been a fascinating journey. We've traced the path from primitive barter systems through the era of coins and paper money to the creation of banks and the introduction of checks and credit cards. We've seen how the digital revolution brought us online banking, digital wallets, and peer-to-peer platforms, forever changing the way we transact. In the world of payments, the only constant is change. So, what's next? Only time will tell.